What's up? Welcome back everyone to another stock review. We're doing the Russell 2000 stocks, which is small to middle-sized cap company. So today we'll be overviewing the ACHR Aviations called ACHR. So without further ado, let's get right into it. So over here we have the chart of ACHR. And looking at it, it's actually quite decent, right? Because we have a going up, pullback, going up, pullback, just creates higher highs and higher lows. But whether or not if this company is actually a potential investment tool in order to observe, and whether or not it will actually keep on going higher and create all-time highs. Well, that is the case when you just look at few time frames, right? But if we switch to the daily and scroll back, you can actually realize that this stock has been plunged since the day of its IPO. It actually went up almost 1x, but at that point of time, they just dropped hugely. And only recent years during the 2023, they start to recover and gain that increase in terms of share values. So we're going through their financial first. So over here, we'll be looking at their financial status, looking at their revenue. We can actually observe there is no information about the revenue, and signifying that they might not be having any sales yet or any obvious revenue reported. So by trying different sites, we are actually looking at Yahoo Finance right now. The total revenue is actually also zero, meaning that we can just only consider that the total revenue for the ACHR itself is actually not predictable, and actually it's a minus 1 point already. So next up, we'll be looking at their net income, whereby it's just decreasing trend, showing the non-profitability of this company, while at the same time not showing any signs of turning or any potentials to become profitable in a short while. So moving on, we have the free cash flow, which actually also signifies that they actually spend more each year. And for here, you can see a decreasing free cash flow in a negative trend, which actually shows that the financial status of the company is very weak. And me personally, I would actually really prefer to avoid this kind of investment because of having negative free cash flow as well as net income. And lastly is going to be their R&D expenses. And for this one, they actually keep on putting money into their research and development, indicating that they are actually focusing on their innovations as well as development of their process or their service being provided, showing the sign that they might have the potential to grow their company if the commercial or the products that they sell are actually being in high demand. So after looking at what their financial status, we can actually conclude that the stock does not actually perform pretty well, at least at the moment. However, according to their business model, which we're going to look into to see what they actually do, will determine whether or not if this company in the future will have some potential in terms of growth as well as generating income. Over here, we can actually observe it's same as the Joby, which is the previous stock that we previewed. ACHR is also developing electrical vertical takeoff and landing aircrafts. So basically, they also provide this eVTOL aircraft for passenger transports and for quick, quiet, sustained urban air travels. They also mentioned for now the ACHR has no meaningful recurring revenue because they are still in the development process as well as certification phase. So few of the income stream is going to be their aircraft sales, the urban air mobility service, which is the air taxis, their government and military contracts, as well as maintenance, training, and support services. So basically, this is a company that has a similar business model compared to the Joby Aviations from our last video. So this company, right, what they do, they also provide in terms of aircraft, they provide sales of the aircrafts, they have contracts with the government or the militaries, and they also provide support, maintenance of the aircraft as well as training of the pilot to drive or to run the aircraft itself. So from here, we can actually see the difference between ACHR and Joby is that Joby provides a partnership, strong partnerships with a lot of different companies such as the Hyundai, the Delta Airlines, as well as with other property groups or firms to build platforms on the rooftop. So this is something that ACHR does not have. And after looking at what they do, let us look at their strengths and weaknesses, whereby they are actually strong industry tailwind because of the expectation of growing in terms of urban air mobility as well as aircraft in the next decades. It has strong strategic partnerships as well, which is actually United Airlines and Stellantis, which is the parents of Jeep for aircraft manufacturing. Besides, they have the government backing, which awarded up to 142 million in US Force contracts, which validating the tech for dual use, plus which is the civil for the Airbuses and military use. And fourth is going to be their quiet and sustainable design, which is kind of similar to Joby's. And finally, it's going to be the first mover advantage. Moving on to the weaknesses, and one of the obvious ones is definitely no revenue yet. And also, from what we observe from the revenue chart, it doesn't actually earning any revenue, and it's in the pre-revenue stage, which means they're also similar with Joby, whereby they still have not commercialized their product yet. And maybe we'll take another 2 to 4 years to observe this company and see how well they will be able to grow their business model. And second is going to be high cash burn because of R&D regulatory, and likely need more funding or contracts from the government and militaries, and also have the certification risk, intense competition, which actually involves with Joby Aviation, as mentioned, Lilium, Vertical Aerospace, and so on and so forth. Fifth is going to be the infrastructure dependency. So they need vertibord changing station and air traffic interchanges, which is something that the Joby actually provide, which actually involve just one of the rooftop stationing method, whereby they actually needs to depend on Joby's rooftop in order to land, or maybe they need to partnership with other people in order to build their own rooftops or their charging station. Lastly, is going to be their technology uncertainties. So after looking at what they do and the strengths of the weaknesses, it's actually quite similar and very similar to Joby, as they are in the field of providing urban mobility in terms of aircrafts for the cities, and they also have contracts with the government, with the military sites, in order to produce a aircraft products to provide to the civil as well as military purposes. Well, now let's get back to the ratios. Over here we have the debt to equity ratio staying below a value of 1, which is pretty cool, indicating the company actually has less debt. And for the ROE and ROIC is not very good because of being in the negative form, as well as for the ROIC is in the negative of 42%. Moving on, going to look at their net cash, which is the total number of cash minus of the total debt. However, we can actually observe a pretty decent amount of positive cash, which actually indicates that they are being awarded with a lot of cash by the contracts, by the sponsorships, in order to do their R&D as well as manufacturing of that aircraft. So I guess that is all for their financial status as well as what they do, their strengths and weaknesses. And it's pretty obvious that it's actually one of the competitive company compared to Joby Aviations, whereby they both do aircraft sectors. And in my view is that the situation of these two companies actually at a same phase, which is pre-revenue stage, and actually takes another 5 maybe years in order to observe whether or not if their business model or their products is actually in high demand, because they have not yet launched or commercialized their aircraft or Airbuses, which does not officially generate any income for them. So of course my take on this company is that it's also a very interesting, as mentioned for Joby Aviations. However, according to what they provide is similar to Joby, but one of the things that I don't like is that they don't have partnerships with firm or property groups to build rooftop for of their own in order to land or to fetch their customers, which they actually need to depend on other services or the rooftop services provided by Joby, which can actually increase their operating costs, and this could make Joby having the edge or the advantage over this ACHR. Before we move on to the summary, let us look at the economic mode score of the ACHR Aviation. So its brand and loyalty pricing power is actually scored at 6, because it's also one of the early movers in terms of these aircraft services with strategic partners such as the United Airlines. But this is somewhat not certain yet, because the product is not being commercialized and needs to depend on the future demands as well as future productions. For the high barriers to ensure is actually pretty high and score at the number of 8, which actually needs a lot of patents, a lot of regulatory processes, as well as manufacturing partnerships. High switching cost is scored at number of 6, because they actually face onboarding and certification costs once committed, but lack of commercialized product and also have a lot of competitive costs compared to Joby Aviation, which might actually produce a similar price range but with different services as well as products. And for the network effect, it's actually at 7 because it's partnership with their United Airlines, the Abu Dhabi Aviations, and planned air taxi networks creating reinforcing values. And for the economic scale, it's actually at 7 because of its expanding liquidity of up to 2 billion and manufacturing via Stellantis and also have sponsors or award from the contracts with government as well as their military force. So the final scoring of the Moat is going to be 6.8, which is kind of similar to the Joby Aviations, sitting around moderate and narrow mode. And for the analysis from the Guru focus, the Moat score is actually at 3, showing that there is no Moat at all. So the take is actually similar to Joby Aviation. So in summary, I do think that this company is a very interesting business model. But if you were ask me which I would prefer, ACHR or Joby, of course, for now, based on the statistics or based on what they provide in terms of services, I would prefer more of the side of Joby Aviation because of wider range of servicing as well as it kind of involve vertical integration because of partnerships with the property firms to build rooftop servicings, whereas the ACHR may need to depend on the services of rooftop or charging station provided by other companies, which can increase their operating costs. So summary is that I will actually wait as well few years because I want to wait and see after commercialization and sales are coming in to see whether or not if demands are actually high and they are generating higher revenue, higher net income, and increasing ROE, ROIC, as well as free cash flow, and just to build up their portfolio in terms of their financial status. So I guess that is all for today's video. And if you find this video very helpful, gain some information, you can actually support me by clicking a thumbs up, share this video, subscribe to my YouTube channel, and yeah, I will see you on the next one. Goodbye.